Hi, this is Brent
Brent
Cooper,
Cooper,
co-founder of
co-founder
Moves the
of Moves
Needle,
the
author of New
Needle,
York
author of
Times
New York Times
bestseller, The Lean
bestseller, The Lean
Entrepreneur.
Entrepreneur.
Welcome to
Welcome
the
to
Lean
the Lean
Lunch.
Lunch.
So Moves the
So Moves
Needle,
the
we
Needle,
bring
we bring
lean startup to the
startup to the
enterprise,
enterprise.
and want to tell you a
Want to tell
couple
you
of
a couple of
events that we have
events that
coming
we
up.
have
So
coming
if
up.
you're in New
So
York
if you're in
City,
New
we're
York
doing
City, we're
a
doing a
corporate
corporate
innovators
innovators
brunch
brunch
this
this
Friday.
Friday.
So
So
you can check out our
you can check
website
out
for
our
more
website for
information
more
on that.
information on that.
Also,
Also,
we will be
we
in
will be in
Israel in
Israel in
September,
September,
India
India
October,
October,
Back-End
Back-end
Innovation
Innovation
Conference
Conference
late October
late
in San
October in
Jose, and
San
of
Jose,
course the
and of
Lean
course the
Startup
Lean
Conference
Startup
is coming to
Conference
San
is coming to
Francisco in
San Francisco
November,
in
so get
November.
those
So
tickets now.
now,
So I wanted
so
to
I wanted
welcome
to
to the
welcome
show
to the show
today
today
Stephen
Stephen
Forte,
Forte,
who
who
is a
is
startup
a startup
entrepreneur,
entrepreneur,
has blown up
has
at
blown
least
up
one
at
of
least
his
one of his
companies in a good
companies in a
way,
good way,
and used
and
some
used some
interesting
interesting
tactics,
tactics,
and now is
and now
a
is a
investor in
investor in
startups.
startups.
He's also got a
He's
long
also got a long
history
history
with
with
applying
applying
Steve Blank's
Steve
customer
Blank's
development
customer
and
development
Eric Ries's
and
lean startup concepts,
concepts.
even though
Though
arguably
arguably he
he did some of these things
some of these
before
things
those
before
terms
those
were coined.
terms were coined.
But we'll talk
But
about
we'll
some of
talk
that.
about some of that.
Stephen Forte, welcome to
Welcome
the Lean
to the
Lunch.
Lean Lunch. Thank you, Brent. It's great to be here.
Yeah, so why don't you give the audience the quick rundown
Down
on
on
your career?
your career. Sure thing. I'll be brief because it's about 20 years since I graduated college, and I've only had one real job. I worked on Wall Street as a runner on the New York Stock Exchange, which was a lot of fun. But that job went away with Nasdaq and automation and all that fun stuff. And have done pretty much startups ever since, which has been great. And I started off more as a consultant, I guess not really in startups. Did that for a little while, then the dot-com boom came, and I jumped onto a dot-com, which was in the consumer space, which was pretty cool. And that's where was my first introduction to venture capital and the idea of running a startup and things like that. And this is about 1999 now. And as I said, that was in the consumer space. There was a company called Zagat, which was the restaurant guidebooks. And back in the dot-com era, it was fashionable to do a spin-off and call it a startup and then try to have it go public. And that's exactly what we did. So we did the whole spin-off and went off and raised money. And we started with 2 people. We went to about 150 people. And then we went down to about 30 people after the crash. Went through the whole cycle. That company was eventually sold to Google. It's part of Google Maps and things like that. And then I did 3 or 4 what I would call boring startups. And the boring startups actually are the best because they're B2B and they make money. And one was in measuring the amount of money advertisers were spending on the internet, which sounds boring today, but this was 15 years ago or 14 years ago, probably about 2002. And that was great because it measured, as I said, what you were spending and where the disintermediation was happening. So at the time, newspapers were your key advertising for segments such as automotive, real estate, or job boards. It's hard to imagine today searching for a job in the Sunday newspaper, but I guess people Brant our age, that was kind of what you did. So we measured that, and the same thing with buying a car or finding an apartment and things like that were all classified ads in the newspaper, which of course is over the past 15, 20 years is really decimated the newspaper business. So we measured that, and that company was acquired by another publicly traded company and is still going and does a lot of interesting things, like it sells data to hedge funds and it's part of the consumer price index, and it does a lot of it was an early big data play, believe it or not an infrastructure side, but meaning we gathered just a few gigabytes of data per week and then did a lot of number crunching and then sold the results of that, which is pretty cool. Then
Nice.
after that, did 2 startups in ocean freight logistics. One was pretty much Expedia.com's business model for ocean freight containers. And I like to brag that 70% of the world economy floats on a boat in some capacity. I'm just looking around me. I mean, the computer I'm talking on was imported, right? Even though a lot of the economy is a service economy, it's still powered by the technology that was imported or had some type of ocean freight commerce. And we built an exchange. It was the only one of its kind, and it had about 10% market share, which means 7% of the world economy, passed through a system that, we developed and designed, which was pretty cool. And that was, again, luckily, again, that was venture backed and sold to a larger company. And then once the earn-out and all the non-competes were done, we did the exact same thing for the chassis. So when the container on the ship was Coming into port, we built kind of Avis Rent-A-Car for the chassis, because truck drivers, those big 18-wheeler trucks you see on the road, the truck drivers only own the cab, the front, I guess the first 6 wheels, right? The back, that whole chassis that holds the 40-foot container, they're rented for about $40 a day. And they do these long hauls, and they go back and forth, and there's 200-300 million of these around the world. So we built a system that would facilitate that. And that was actually an interesting exit, because that was spun into private equity. So that's a little weird. And then lastly, I was super early employee at a developer tools company. And the co-founders were all based in Bulgaria. So it was a great experience for me, being international from day one. I walked into the company, and it was like a bunch of guys sitting around coding in this, I call it a communist garage. It was a very Eastern European environment at the time. Hopefully they don't watch this video. Well, they will, but hopefully they don't get offended when I say that. But it was true. It really was this old Eastern European, old school place. And the company eventually grew to be about 700 people, and a huge, we built buildings in Bulgaria, and we had offices around the world. And it's interesting, because then we had to rediscover our startup roots, right? Because I remember the company when it was I remember the first time I met the guys, I think it was a dozen guys. It was just really, really small. And then, we had teams that were larger than that, right? Later, just a few years later, after we took the venture capital. So it was an interesting experience. And that company was sold last year to a company called Progress Software. And then after that, I left and started a venture fund with 2 partners. And we're investing in startups, early stage and Series A.
Nice. So of all of the companies, this last one, Telerik, that started as a startup but grew to 700 employees. So by that time, you're no longer a startup.
But we called ourselves a startup.
Well, in some ways, right? You didn't have a liquidity event, so the investors didn't get a return until you actually sold. So to me, that is sort of a threshold of when a startup stops being a startup. But sort of in classic Steve Blank terms, startup is not a small version of a big company. Yet by the time you're 700 employees, you're pretty much acting like a big.
Well, when you start looking at some of Steve Blank's terms as well, he starts talking about how you have a startup on one side doing customer development, and then you have a big company on one side doing product development. In the early days, we were doing customer development. Again, this was probably either before or around the time Steve Blank coined the term. But by the time we were 600 or 700 people, we were doing product development. We totally were. And so we had to kind of relearn a lot of this. We had to relearn a lot of the startup culture. And what's interesting is it did change, because as you mentioned, I did a lot of this lean startup stuff before it had a name. But since it wasn't written down on paper, the way you did a startup definitely changed over the last 10 or 15 years. So when we started the company, and then when we realized we were too big to continue doing product development, we had to relearn some of these things. There was no such thing as a business model canvas, for example, when we started Telerik, but eventually we incorporated the business model canvas into the teams, right? It was a tool that didn't exist, when we first started.
Was there a moment that you realized that you didn't have the startup mentality anymore?
There was definitely a moment where I was being tracked down for someone to fill out an expense report, and then I was told I wasn't allowed to spend $14 on a Dunkin' Donuts at the airport. And while that might not be a product development type thing, it definitely was wow, we're a big company and we have process and procedure in place. And there definitely was another moment when we realized we were not a startup, when we started seeing when we started considering acquiring other companies that were doing things faster than us. So that was definitely one of those moments as well.
And was that? I'm trying to get rid of this echo, but sorry, I'm not sure what's going on.
It's actually not too bad. The echo might be more on your end.
Yeah, I heard some from an audience that they were hearing it as well.
Oh.
So, what were some of the negative aspects of think of not being startup-y?
Well, definitely one of the negative aspects. I mean, there's a few positive aspects, and you have a little more money and things like that. But definitely one of the negative aspects would be that we weren't able to adapt fast enough. Let me tell you just a tiny bit what Telerik did, so they can give into context. Telerik made software development tools, and predominantly at the time, it was for the Microsoft platform. I mean, this was kind of before iOS and Android were big. And every 12 to 18 months, Microsoft would release a new version of its .NET development tools. So every 12 or 18 months, we really had to kind of rebuild everything. So the minute we released something, it was out of date within 3 months, 3 to 6 months. And we also, because Microsoft, they entered this era where I think it was the Stephen Forte era, where they kind of stopped talking publicly about their long-range plans. We, as a close partner of Microsoft, would find out around release time what was in the product. So then we had to really rush and build things. And the big negative of not functioning like a startup was we were just really slow, and we didn't necessarily put the customers first. We would just build it and hope that they came, right? Where in the earliest days, we really were collaborating with the customers. The history of Telerik started off as a consulting company. And then the developers built these tools to facilitate the consulting, make their consulting lives easier and make the speed easier. So they were the first customers. But then the second customers, they really were on site working with those customers and getting things going. So they really were doing customer development without knowing it. And then as the company grew bigger, it just started doing product development. So they weren't necessarily building the right features or building the right products towards the end of the life cycle.
So do you think this grew out of your success, though? I mean, was it because you were growing so quickly that the company sort of naturally evolved towards building more product, building upon feature requests that they were getting from their customers? Is that a natural evolution?
Yeah, I absolutely think it's a natural evolution. What happens is when you are a small company, you're going to be gritty, you're going to be a hustler, and then when you're a larger company, you start getting a little more conservative because you start protecting your cash cows, you start protecting all the things that are out there. I think this is inevitable. It actually goes back, it's funny, it goes back to the conversation you and I were just having before we went online. I talked about an economist named Ronald Coase, and he wrote a thesis in the 1930s called The Nature of the Firm, which talks about firms get bigger to lower transaction costs and enjoy economies of scale. And I think that's just the natural evolution of startups. Is eventually someday, if they make it big, they go from move fast and break things, which was Facebook's early saying, to now they say move fast with stable infrastructure, right? Which tells me that they're now a boring, no longer startup company.
And so then the structure of the company needs to reflect that. So this is where you start building up, engineering departments that are even physically siloed from the marketing department, from the sales department, from operations.
Well, that's exactly what happened. I remember a meeting we had in Hong Kong. I was living in Hong Kong, and the whole management team was in Hong Kong. This was about 2 years before we were acquired, and we said, we have to break down the silos. How do we get these silos? And we tried, rearranging the structure in order to break down those silos. That's exactly what happens. I think it's, and then you start getting then you get people trying to bring some like they call it entrepreneurship, into the company, but they are like this isolated black box that's way over here. And then what happens is, you don't have the ability to kind of absorb that back into the company because they're beaten down, and you have to look for more creative outlets to do that.
And so why not just grow through acquisition then? So why not, okay, we're a big company, we don't know how to do this anymore, why don't we just go acquire companies that can bring us the new technology and bring us new innovative people?
So I have been on the receiving side of that. I have a unique perspective on that. I have been, if you remember, you asked me to describe my background. So if you did the math, I worked at 5 companies, and all 5 of those went through a liquidity event. 4 of them were absorbed into a larger company. So I've watched what happens when that transaction takes place. And everyone means well, and the acquiring company, except that maybe if it's an acqui-hire or something, but typically speaking, everyone means well. And the problem is the larger companies have a bureaucracy that naturally just starts beating down the entrepreneurs in the other company. And I'll give you a very brief example. Is in one of my startups, I can't mention which one. Well, I probably could, but let's protect the innocent and the guilty. But I was with my business partner, and we're on the phone call with the CEO of the buying company. Now, this was well into transition. This was 6 months, a year after the deal. And the CEO of a Fortune 100 company is on the phone complaining that our product, which is now a division of their company, doesn't have an email me my password button. Our login page doesn't have an email me my password button. And he then said, something about, well, I guess you just go into your admin screen and blah, blah, blah. And I put him on mute and looked at my business partner and go, we don't have an admin screen. I go, my developers just go straight into the database tables and add the entries. I mean, because that's how startups operate, right? We never had time and money to build admin and things like that. And he gave me a long lecture that we're a publicly traded company, we have customers, we have risk, and he is correct. Meaning is, it is amateur hour to only go into your to a production, back-end MySQL database and type an insert statement, right? That is a little amateur hour, but that's also what startups are like. So there does need to be a little bit of structure once you go through those acquisitions or once you get a little bigger, but not, it's not 0 or 1. It's not like, absorbed into this big publicly traded mindset. I'll give you another example. Is we used to release every Friday. And we thought we were cool, but we were trying to be cooler, right? We were trying to do continuous deployment and release like Amazon like every 48 seconds. Like we wanted to be like cool. So we actually looked at releasing every week as the absolute slowest we can go and still be agile and still be lean. We went from releasing once a week, which we thought was slow, to once a quarter, right? Once we were absorbed by the larger organization, because their production release checklist was like, 10, 15 stacks of paper high, right? So it's tough. Now, on the flip side, at Telerik, I was on the teams that have acquired some companies and integrated them into Telerik. And we were maybe at the time 200-300 person company absorbing a little 4 or 5 person companies. And we did the exact same thing. And I didn't realize it till it was like 50% through. And I'm like, oh my God, like where'd the email me my password morons, right? Like, we were pushing our VPNs down on these people, pushing our big company procedure down, and they rebelled. I remember one of the companies we acquired set up their own Wi-Fi network because our security procedures was too much of a pain. And oh man, that caused, as you can imagine, tons and tons of problems. But in essence, they're just trying to keep those startup values. So I guess larger companies suppress that because it either, your culture has grown to the point where those things aren't acceptable. So fundamentally, I don't think acquisition works in order to get the startup, lean startup, and customer development values into your organization. You're going to have to want to do that yourself. Acquisitions can work for other reasons, for economic reasons, personnel reasons, of course. But if the sole purpose of your acquisition is, we want to be more agile, we want to be more lean, yeah, it's not going to work. From my 5 or 10 experiences doing that.
Right. I mean, we've have clients that have experienced that if they don't try to change their internal culture to become a little bit more entrepreneurial, it's very difficult to keep the talent that you've just acquired.
Well, it happens in most of the acquisitions.
So what about
those founders are gone and those early employees are gone within a year or 2 of the acquisition? Actually, in every single one of mine.
So some of the other methods that large companies do, they've got acquisition, they've got designating a couple teams as being their innovation team, they've got internal incubators or internal accelerators, or sort of let's change the mentality by teaching everybody to be a little bit more entrepreneurial. You have a specific experience with one of those. I think most companies will try a variety of those things to see actually which works. But I think you have a pretty good, interesting story around the adding the accelerator program. So maybe you can tell the audience a little bit about that.
Yeah, I'd love to. So what happened is, I'll first give you just a little bit of historical context for framing. What happened is we were a developer tools company primarily making good money. We're probably $40+ million company, year company, making money mostly on Windows, like enterprise Windows stuff, right? So people building a website using a Windows server using the Microsoft .NET framework. Then Steve Jobs comes along with the iPad, and we're like, holy crap, we need to get this. We need to build development tools for the iPad, or we're going to be irrelevant in a few years. So the development team was like, oh, no problem, we can make components for the iPad, and I'm like, time out. You guys will build Windows Server components and then make them smaller and make them the edges round and then call them mobile. I go, we need to understand how mobile works, and we need to really do some true customer development here. This was at the point where the company was a lot bigger, And I've already kind of witnessed, probably because of some of our acquisitions that quite frankly didn't go as well as planned. They went well economically for Telerik, but they didn't necessarily go as well kind of trying to bring those startup values and culture into the organization. So what happened was I had already started trying to get the company to be more lean, more agile, think more like a startup. And what happened was we had this, I told you, this issue where we had this Microsoft mentality and we wanted to build iOS components. So I said, let's start engaging with startups and watch how they work. Let's do true customer development. Let's go embed ourselves with the startup, see how they solve these problems, look for mobile-first startups. This was around the time where Instagram maybe started popping up. They weren't sold or famous yet. But Instagram, I bring up Instagram because they were one of the first mobile-first companies. They didn't bother to register their domain name, which is somebody my age from the dot-com era. That's like, you didn't pay money for your domain. So we're sitting around the boardroom, and I said, well, we need to engage with the startups. And we realized it was very difficult for a company like ourselves to just go out and talk to startups. Like, how do you do that? Do you just drive to San Francisco and walk around the streets, say, attention, startups, right? So what we did was we decided that we would probably look to engage with an accelerator. And I actually talked to some of the big accelerators like Y Combinator and Techstars, and I was actually it at the time. I think they were the only accelerators. And they would not, we offered to do an accelerator with them, but they would not do an accelerator only for mobile development. So these, all the guys that were doing it at the time. So we decided to go, and they kind of just then told us how they build accelerators. So we went and built our own accelerator. And what we did is we went the exact model that Y Combinator, Techstars does, and we did it in Hong Kong, where I was living at the time, and I'll tell you why we did it in Hong Kong in just a second. But we brought the companies in, we did the exact accelerator model, gave them, I forget the exact numbers because we changed it over the years. I think at the end we were giving them about $30,000 or $40,000, and we had a 14-week program, 15-week program with a demo day, a complete customer development kind of training course where the program director would literally kick them out of the building and say, come back and tell us what you did. And we tried to teach them how to build a real MVP, not a beta, things like that. Now, the goal of this program was not, most accelerators, their goal is to go make money, go take 8% and hopefully go public and things like that, or get sold to Google or Facebook or something. Our goal was for Telerik to learn. That was the only goal. The only goal was the equivalent of having Telerik product developers and product managers and developers sit behind the proverbial two-way mirror and watch how these mobile-first startups tackled mobile development. So some of the companies failed completely in the accelerator, failed insofar as a business, but they were complete astonishing successes to Telerik because those entrepreneurs would walk us through the problem set. Those entrepreneurs walked us through everything they did, which helped Telerik then build what's called today the Telerik platform, which, quite frankly, was one of the, which is its entire mobile, it's its mobile play. And the beautiful thing about it is that's what made Telerik very sexy to its acquirer, right? So it truly it was the beginning of the path of leading Telerik to not only become more entrepreneurial internally, but then, build a product. So, we could have taken two other approaches to build this product. We could have done the traditional product development approach, and we would have done the wrong product. Or we could have hired somebody like a Gartner or something to kind of sort of tell us what to do. And we would have paid a lot more money and still built the wrong product. Probably slightly less of a wrong product, but we still would have built the wrong product. So by embedding ourselves with 2 or 3 dozen startups that were doing mobile development, and it was funny because the startups were like, well, can we use your tools? We're like, we don't have tools. Use the tools that are out on the market, and we're going to go build them. By the second or the third batch, we had some tools that we let them use and play with, and we started getting feedback on those tools, which was great. And by the time I took the accelerator to Palo Alto, it made it more of an incubator than an accelerator. It was for people using our products and getting feedback. It was a little less. What's interesting about this model is shortly after I made sure all of the senior executives and founders and everyone else came to Hong Kong and spent time with the teams. Once they got back to their desks, they started talking. They had like a fire under their butt. They spent a week with startups, and they were like, wow. And everyone started talking about customer development. And it started off where the first thing they did, the CEO did, every team needs to have a lean canvas. All right, it means well, but that's what big companies do. You kind of start that way, right? You start with the tools. And it became a bit of documentation as opposed to a learning tool. But then because they were in the habit of doing it, when the new product started getting developed, they started using the canvases, and then they started actually going, because they're using the canvas, they started doing the functionality. But another strange thing happened is we had a little turnover over the years. As you got to be a big company, some of the old timers leave. So we started hiring young millennial kids that were already experts in the lean startup. They've read the books, they've lived it, they might have actually worked at a startup already. And those people just jumped right in because we had a little bit of that infrastructure in place, and we had the accelerator logo, and we had the accelerator kind of bubbling up. So to be completely honest with you, my first and only goal of this accelerator was to build, was to use it as, to use it to build, quite frankly, just a product specification, right? I mean, which it did, and it worked. My second goal was, well, let me actually treat this like an accelerator and see if I can get some exits. And, 2 of the companies were sold, so, not too bad, track record. I never expected that we'd be able to kind of bubble up a lot of the lean startup and customer development methodology ideas and values into the bigger company. And I think about a year in, after the batches, I think after we were doing the accelerator for 1 year, we had a big company meeting, and the CEO was on stage talking about customer development in front of the whole company. I'm like, success! I was like, wow, this is amazing.
Yeah, no, that's brilliant. I mean, I think
approach. And to be honest, it was all done by accident.
Well, that's why we don't write business plans, right? Is because so much is done by accident. But I think that one of the things that we encourage people that want to introduce this to their large enterprise is just to start doing it and put the tools up on the walls so people can ask questions and you can bubble up. I call it even training up. But I'm curious, how did you sell this to the C-suite? I mean, was this that you were doing learning, or was it that, hey, I think we could get some exits out of this?
Oh, it was definitely not the exits. And believe it or not, the venture capitalists on our board were wildly enthusiastic around it, and not because of exits. And when I started talking about things like that, they started asking me all VC questions. And I'm like, well, let's not go down that road. So, and this brings up an interesting point. So in the C-suite, which I was one of the executives myself. I was the chief strategy officer and an old timer, right? So people would lump me in the category with the founders. It was like the old guard and some of the new guard. So I was old guard. But in the boardroom, so to speak, we were sitting around, and I brought this up. Part of it was, it was all learning. Was really what it is, and the other part was a little bit of branding. Meaning is, Telerik wanted to be more engaged with startups, and if we built a developer and entrepreneur ecosystem around our accelerator, we would then have a pool of entrepreneurs and developers to talk to, right? So there was a little bit of a branding play, but it really was it was 90% of the goals were learning when we would state the goals down. I mean, it truly was the two-way mirror, right? Like which Microsoft and IBM made famous in the old days. It was, let's go in and understand, because I know it's hard to fathom today in 2015, but like 2010 or so, when I'm making these proposals, mobile development wasn't ubiquitous. Mobile development wasn't sexy. So we had no idea what was going on in mobile development. So, today it might seem silly. You have to build an accelerator to learn about mobile development, but yeah, you did at the time. There was no one doing it. It was the fastest way for us to get into it. So I wouldn't say we were desperate, but we were definitely cognitive of the fact that we were not experts at mobile development, and smaller startups were.
Right. Well, and that also goes beyond just the tools. You're actually learning what are their issues in mobile development in a deeper way if they're sort of inside your building. I guess there's an irony there. Right. You're getting outside the building by putting them inside your building.
Yeah, exactly. Well, they actually weren't inside our building. We did it in Hong Kong. We chose Hong Kong for 3 reasons. The first reason was I was actually there already, but I would have moved to wherever we needed to do it. But Hong Kong had 2 unique facts. The first fact is it has the largest smartphone penetration in the world, and it's actually over 100%, which is amazing. I mean, it's a small country, 7.5, 8 million people, and then they have 7 4G providers, because I think an all-you-can-eat mobile plan in Hong Kong is about $20, right? Meaning unlimited 4G, unlimited text, unlimited phone call. So everyone's got 2 or 3 phones. And then secondly, the other reason why we chose Hong Kong, it's Facebook's largest market per capita. right? So I think it's like 75% Facebook penetration. And because most mobile development at the time when we built the accelerator was using Facebook Connect to log in, right? We felt that those two things just made it really, really good for people to do customer development. We really chose Hong Kong because we thought it was a city where people could, for mobile specifically, could go do customer development rather easily. So we actually worked at a co-working space in Hong Kong that we just paid the co-working space. So it wasn't an arm of Telerik at all. So partly that was also made it easier to sell to the board, where if I screwed up all the way out in Hong Kong where nobody would notice. Like, no offense to Hong Kong, right? But it's a small market. It's not like if I went to Silicon Valley and built this big thing, right? We eventually did that once we had success in Hong Kong, right? But it was a little easier of a sell that I was doing it out in Hong Kong. So we didn't actually bring them into the building. So what I did is I did take my executives and my first line of product managers and some developers, and I took them and brought them to Hong Kong. So they were out of the building. They left Bulgaria. They left the other places, and they came to Hong Kong and sat in a co-work space side by side with these startups for, some of them as long as a week at a time.
So did that co-working space already have sort of that classic co-working startup atmosphere? I mean, did they pick up on that when they went to those places then?
Yes and no. Co-working was a brand new concept in Hong Kong at the time. So what happened was that was evolving, and our accelerator helped push that evolution forward. So we actually used two different co-working spaces over the years in Hong Kong. The first one didn't have that startup mentality, so we actually left, and the second one did. And by the time we got to the second one, it definitely had the co-working mentality and startup mentality in Hong Kong definitely had grown. So that was pretty cool because in between some of the accelerator classes, I would fly people in to go spend time, because then the CEO and the founder was like, Steve, this team has some issues. Have them come to Hong Kong and spend a week with you at the accelerator. And the accelerator wasn't even going on, right? So what I did is I flew the team in, and then they would spend a week with me at the co-working space, and we would just do customer development, right? And I had our guy at the time. He was our chief innovation officer, and he was an expert in all the methodologies as well. He had done it in a past experience, and we made them go out. One team came in; they weren't doing that well. So what I did is I made them come in over a weekend. And Hong Kong was doing a startup weekend, and I made them do a startup weekend, right? And they really went back to their offices that next week, super, super energized. They were like, wow, like, we need to bring this back, right? Because I always look at startup weekend as a good learning example, right, for folks that are interested in startups. So by bringing the folks in, even in between the accelerator internally became this mythical thing out in Hong Kong, but it was also this curious thing. Like, what's Steve doing in Hong Kong? So luckily, I wasn't spending a tremendous amount of money. I was spending a decent amount of money, but I wasn't spending I wasn't building a building or something like that. Right? So people are trying to get in, and I'd start getting emails from people I didn't even know existed in the company, like asking to be engaging with the accelerator. I'm like, sure, if you have it in your budget, come out, we'll make it work, kind of a thing. So I was really happy that I was able to socialize. The negative to that, though, is once it was successful, and then we were positioning ourselves for an exit, for an IPO, we started hiring those mercenaries, right? You hire the Silicon Valley CMO, the Silicon Valley CFO, the Silicon Valley Chief Product Officer, partnership people, like all those, so you can check the boxes, the Wall Street. And those guys looked at the accelerator as a big waste of time and a big waste of money. Like, oh, what were you doing out there in Hong Kong? You were just playing. And I'm like, guys, you wouldn't be here if we didn't have this accelerator, right? So that's something, if the listeners out there are contemplating this, make sure you have, at some point you're going to wind down the accelerator. You're going to get diminishing returns, and you're not going to do it. And you might spin up another accelerator later in a different domain. But once your learning is done, once you get diminishing returns on your learning, it's time to transform it and either remove the accelerator or change it to something else like an incubator or a partner program or something. But be prepared that there are going to be new people in the company, or if you're a really big company, people in other sections of the company that just won't get what you're doing, and you're going to have to explain yourself. And they're going to be like, well, they're going to be looking at it from financial returns. Now, oddly enough, a few months after my CFO started, we sold one of the companies. So I joke, he started talking to me again. He was like, oh, okay. So, because he looked at it through economic terms, right? Obviously, because that's his job.
A lot of the big enterprises are not going to have the particular situation that you have, where your your customer is also somebody that's doing startups. In other words, that there are actually startup people that you want to sell to. So I was trying to think here, what are some other examples of using this accelerator mindset to your advantage, even if you're not trying to custom dev the actual startups that are inside your accelerator?
Right.
So,
Well,
for example, our client Edmunds.com does hackathons with their APIs, and so even though they're no longer a startup, they have their own tools, and they do hackathons, and it could be an accelerator program where they're trying to get startups to come in and use their technology to figure out what the application of those technologies might be. And that's been very successful. They actually ended up acquiring one of the startups that had started at their hackathon.
oh no, yeah. I mean, first of all, Telerik actually sold to enterprises more than startups, but startups were the only people doing mobile development 5 years ago. So that's why we targeted startups and did an accelerator. Thinking through your examples, hackathons, we at Telerik use hackathons extensively, and I've had a lot of experience with hackathons in other places. Hackathons are a great, smaller, lower budget, faster turnaround version of what what I just described. And that's actually kind of how the accelerator evolved, because actually Telerik's not running the accelerator anymore, but probably 6 months ago, I think even after I've left, they ran a hackathon in Bulgaria. It was the largest hackathon in Eastern Europe. I think, unless maybe there's a newer one. And what they did is, once the product was released to the world, they had a hackathon just for that product, right? So very similar to what you're describing. I mean, Facebook made the hackathons. I think Timeline came from a hackathon, right? I think Facebook Timeline came from an internal hackathon, and then they started saying, hey, let's open these hackathons to the public. And I do think, though, that some form of engagement with startups can work for any company, even if you're not targeting startups. I actually think no company should be targeting startups, because by definition, startups have no money, so they're not going to buy things from you. So I think if your business model is kind of exclusively selling to startups, your business model needs to be really, really airtight. So, I mean, I'm thinking, I don't know why they keep buzzing in my head, because I was talking to somebody there, but BMW is, taking an interesting approach. They have an innovation center here in Palo Alto. Just pretty close to Tesla, and I think that's one of the reasons why. But then I believe, this may not be public yet, so I'll talk in broad strokes, but they're doing some kind of incubator, accelerator in Brooklyn, right? They've got some space. I know they've announced something, so that's about as far as I'll leave it there. But, what people have told me publicly, they've said, is the following. They said, at BMW, we build cars, and things move really slow. And it doesn't move slow because we're slow. I mean, it is. But they go, cars come out once a year, and we need to get something into the car. Let's say he used the example of Pandora. He was speaking in Silicon Valley. This was the head of something at BMW. And he goes, in order to get Pandora onto the dashboard, we have to make technical changes, design changes, testing changes, and then put it into the next model year. So it's a 2-year process. And he goes, by the time it's released and out in the cars, you've switched from Pandora to Spotify, right? And we've made the wrong choice. So they decided that they would rather engage with startups. They'd rather build an extensible platform and have people plug into the platform. And so they've been sponsoring hackathons and incubators, and I think they're going to start doing it themselves as well. So I do believe that you can get that the big companies, you don't move much slower than a car company, right? One release a year. These products are 5 years in development. I mean, maybe only Boeing moves slower, right, in that respect, building aircraft or aircraft carriers, things like that. But they are trying to engage and get that customer development methodology back up into their system, into their processes and procedures as well.
I know they're also testing out doing one-way car rentals in Europe, which I think is an amazing idea.
For sure.
Sort of disrupting the rental car industry. Yeah, I agree with you. I think that one doesn't necessarily have to predict beforehand what the benefit is going to be, but I think all large enterprises should be engaging startup communities in some way on a regular basis, and I just think there's no way they're not going to learn something important. So you had an interesting comment earlier that I wanted to maybe dive into a little bit, just because I think maybe some large enterprises in the audience don't necessarily get this. But what's the difference between an MVP, a true minimum viable product, versus a beta program?
Sure. This was something that it hit me all at once. It was in the middle of running the accelerator, and I was so I kept hearing MVP, MVP, MVP. And one of the teams, they were from Portugal. They came to Hong Kong and they said, "Oh, we're really excited. We have 13 weeks during the program, so we can just sit and code all day." I'm like, "Oh!" And I used to call them the Maxi P. I said, "You're building the maximum viable product." But at the same time, I had to fly from Hong Kong to Las Vegas to a board meeting of a nonprofit I was on the board of. And the managing director was talking about an MVP of the website, which was a beta. And in essence, what I learned in both the startup world from myself, from reflection of what I've done, I've also learned from being an investor and running an accelerator. And then I've learned from, as I said, just talking to other people, then even here living in Silicon Valley, is people are building large, products, or they're building beta versions and they're calling it an MVP. What we used to call a beta in our generation, right? Like what we would call a beta, people are now just calling it MVP. We just replaced the term. And an MVP is not that, right? An MVP is supposed to be an experiment, right? It's supposed to be some type of experiment that's designed to measure the user's behavior, that tests your assumptions, right? And then because you can measure the behavior that tests the assumptions, you can make decisions and learn from it. And in essence, MVPs are supposed to be like a day's worth of work or half a day's worth of work, and you put it out there and you measure a behavior, you test it with 200 people, 100 people, you get the results, you learn from it, and then you kind of iterate, as Eric Ries said, build, measure, learn, right? So I fear that we as an industry, collectively, just like the whole tech and startup, and this is not a problem just for tech. I mean, you have big corporations calling it an MVP. The day I'm going to shoot myself in the head, and the day that I'm sure like people like Eric Ries will be like, crying, is when Google replaces its beta tag on everything. Like Gmail always has beta with MVP tag, and then we're going to be like, oh God, right? We know we have failed in that respect. So I've been pushing entrepreneurs to build MVPs, and my first challenge when I meet a startup, and my first challenge when I invest in a startup is, can you build me an MVP that doesn't involve a computer? And they're like, oh, what are you talking about? I go, I don't want you to build an app. I don't want you to do this. I want you to build me an MVP that doesn't involve a computer. And my biggest success on this was a company was trying to build I still think travel is a little broken. It's one of the last things that hasn't been fixed by .coms and by mobile. And it will get there. There's a few other, but travel is one of the still broken things. And so I still look at travel startups from time to time. And there was a travel startup that interests me. And the founder wanted to do something with map-based itineraries that was instant. You say, so I'm going to Palo Alto. I have 1 hour. It has your profile, the stuff you like. It just tells you what to do and gives you a map and tells you where to go. It was interesting. So what I told them to do was just get a real map and give it to people, like go to tourist locations and give it to people and highlight it and see what they say, right? Give them an instant itinerary, give them exactly what you want, right? I know it's a little different because, you're not in your hotel room clicking the button, but that was the challenge, to try to get people to get out of the building and talk to people, because most people, when you force them out of the building, they'll just go and do customer surveys. And I joke, people just lie. They don't lie on purpose, but people lie until you give them that piece of paper, that map. They won't know what they're really going to do. You have to build you have to build something that has a measurable outcome, and then you have to measure it. But more importantly, you have to predict what the outcome is going to be in advance. And that outcome, you have to predict a conversion rate, or you have to predict something, because then you have to have your definition of success. Like, you can't just be like, okay, I'm going to have a landing page, and if 100 people come to my landing page, I'm going to continue to move forward. But what if you spent $20,000 on Google AdWords to get those 100 people, right? Like that doesn't, so you need that success indicator, right, before you get started.
Yeah, Eric Ries says, if you just throw something out there to see what happens, you'll succeed 100% of the time, because something always happens.
Because something happened. Even if nothing happened, by definition, something happened because you released the website.
Right. So you might not agree with this approach, but what we try to do is actually separate the term MVP from viability experiments, and we then focus on viability experiments because we're trying to test the viability of an idea versus the MVP, which, again, like you say, people just think that means sit down and write code or work on their real product. And at some point that makes sense to do, but you could still be running experiments actually at the same time. But you're right on. The idea really is that you have to have something to measure that goes along with that, or you're just throwing Pasa against the wall, right? You're just seeing if something will stick. And so the metric that you're looking for has to be tied to specific behavior. Like you said, customers are horrible at predicting their own future, let alone anybody else's future. And so we really want to measure behavior and not just get them to predict how they will act.
And one of the things that I challenge the startups, and the later the stage, the deeper my challenge is. I go back to the magic formula of customer lifetime value minus customer acquisition costs. Has to equal some really big number. And I said, while that's more of like a growth hacking formula, I go, actually, your MVP, you have to be intellectually honest to it, because that's what drives your prediction of success. If you're building some kind of landing page, you have to take into account that formula, right? What is my lifetime value? Oh, these customers are going to, at this point it's assumptions, right? It's a landing page. But oh, they're going to spend $30 or $50 subscription. And if it costs you $51 to acquire those 100 each for each customer, if it costs you $5,100 to acquire the 100 customers, and in your financial projections you're predicting that each customer will spend $50, like your MVP is a failure even though you acquired those customers within your budget. So I tell people, while it's not an exact science, I always get pushback, especially when they're in accelerators and have very little money and things. I always get pushback, but I'm like, do the math. I go, because you can't just build an MVP and say 5% conversion is success. I tell them, how did you come to that 5%? Like, what's your math? What's your logic? Like, where's your budget for that, right? So I don't want people to go start doing crazy budgets. I had one of my founders in my portfolio tell me she was going to do $1 million a year in revenue. She goes, let's schedule an hour for budgeting. I said, let's do the budget right now. Take $1 million, divide by 12. So that's my approach to budgeting. But on the flip side, I do want you to do a little bit of math, right? I want you to figure out what you think your customer lifetime value is, because you will know your acquisition costs on a landing page or some type of MVP. And as I said, this is hard. This is the non-sexy, non-hipster, boring hard work part of startups. This isn't a startup event drinking beer. This isn't speaking at a conference. This is the hard work. Right? This is the stuff people don't necessarily want to do. But if you do it, this is what will put you on the path to success.
Well, this kind of gets back to what you and I were talking about before we went on air about whether startups are really doing customer development and lean startup, and I think it comes down to it is hard. It's way easier to pretend that you're making progress and to write more features to measure that progress than it is to actually go out and validate or invalidate assumptions that are key to your business model.
Exactly. And you have a combination of two factors at play. One, it's hard, and two, the methodology is fairly new. So if you're coming to if this is your first startup, you not only have to do something that's hard, you have to do something that's unfamiliar to you. And then you'll go read the books and you might misinterpret some of the book, or some of the book might be a little too difficult. So it takes practice, right? It takes time. So that's why it's great. That's one of the reasons why repeat entrepreneurs do so well, because they learn from their mistakes, right? So I made so many mistakes in my first startup, and I kind of stumbled across the lean startup methodology about 10, 12 years ago before it had a name, because that's just the right way to do it, right? But I stumbled across it in my second or third startup because the first ones weren't as successful as they could have been.
Well, and I think that the big opportunity today, if you're starting a company or if you're inside of a large enterprise being innovative, is that there are great mentors out there. And the difference between managing and mentoring, managing belonging to that execution part of that business, and mentoring actually teaching people how to do this entrepreneurial stuff. So when you were going through this at Telerik, I mean, did you have internal resources that could act as really great startup mentors, or did you go outside of Telerik?
So in the first batch of the accelerator, I went outside of Telerik to do it, except for the founders of Telerik, right? Because at the time, Telerik was maybe a $40 million company, maybe more. So the two core founders, I made sure came to Hong Kong because they built a $40 million company, right? They did something right. Even though we were struggling with customer development, we didn't struggle in the beginning. So they made good mentors, but most everyone else came from outside of Telerik. And luckily, combination of my network in Hong Kong, there was a handful of good startup people there in the first place, but I was able to get people to make sure that they were thinking of coming to Asia to see customers. Someone who would make a good mentor. I'd make sure that they would, oh, make sure you come during this 14-week window and type of thing. So I was actually able to get the mentors in easily, but 90% of the mentors were from outside of Telerik.
And did that evolve over time? Did you, as the internal business unit managers and people were starting to use these the business model canvas or the lean canvas, do you think that capability started growing inside the company?
Yeah, it's a good question, because that's exactly what happened. The first evolution came is two of our board members, our independent board members, so they weren't at Telerik people, they weren't the investors, were both very successful high-tech entrepreneurs. So they got interested in the accelerator after that first batch. It was so successful. So they came to Hong Kong and spent time with the accelerator. And then probably by the second and third batch, as I remember I told you, we had those lean canvas. This one guy pops in my head for sure. They came out and started becoming mentors. So there were probably about maybe half a dozen folks that were Telerik employees that would come out and work with the teams and spend time with the teams, which was pretty awesome. And by the time we moved it to Palo Alto, we had so much Silicon Valley firepower on staff that probably more of the mentors were from Telerik than less. So definitely went from an evolution in that respect.
So I don't know how much you can get into this, but I'm kind of curious for people in the audience that actually want to get engaged with startups and they think this is a great idea. Number one, what do you think the MVP looks like for doing an accelerator? Maybe it is a hackathon is the MVP, but what do you think the MVP is of an accelerator program that's internal? How might you justify it to management? You were on management, so you were able to you were essentially convincing your colleagues as opposed to your bosses. And so what are the costs involved maybe to get something like this fired up?
Well, definitely, I think it depends on the size of the organization. It depends on the need of the organization. So I almost hate to use the word MVP because we're telling them an MVP is something you throw away and learn from. But in the spirit of an MVP for an accelerator, I think the lowest version of that is a 24-hour hackathon, external or internal. So at Telerik, before we ever did the accelerator, I made the entire company do a 36-hour mobile-only hackathon. So the company can start learning not just that process. I think engaging in doing a startup weekend, which is similar to a hackathon, but for the customer development process, a non-technical hackathon would be a startup weekend to some degree. The accelerator itself is a big undertaking, so I would only suggest doing it if you have a major thing you need to learn about, and the accelerator is only focusing on that one thing. So I know accelerators can be hip and trendy, but if you need to build some new widget and you know nothing about that market, that space, running an accelerator or an incubator or partnering with an accelerator or an incubator is a perfect way to go into that. Another option, which I find interesting, is I didn't know this until I got into venture capital, but a large number of our investors are corporations like Telerik that want to become a limited partner investor in a venture fund, and then they learn from the startups that are in the portfolio, which as I said, I didn't realize companies did that until I became an investor myself. That's another option. That is a little trickier because that's more of a returns focus.
Right.
But in essence, you'd have to pick a venture capitalist that you trust and you've worked with, something like that. But in essence, that's kind of from the low end to the high end of the spectrum, right? Is you can, hackathon is dirt simple to set up. I mean, you can set it up with volunteers and get some sponsors. It's not that hard to set up. I mean, it's work, but it's not super difficult to do. It's just
not super expensive either.
And it's not super expensive, particularly the most expensive thing in a hackathon is the pizza, the venue, and the prize. So if you get a spot, if you have a venue in your office, or you can partner with someone with the venue, and if you can get someone to pay for the pizza, and then if you can get someone to sponsor a big prize, like $50,000, then the rest of the hackathon will cost you almost nothing to put on. It's literally Wi-Fi, electricity, and air conditioning. I mean, and volunteers to manage everything. So hackathon is. It's interesting. When I was younger, when I was a millennial age, right, when I was 22, 25, there were no hackathons. There were code camps. There were things like that, like one-day code camps and things like that. Like I'm like, wow, this is one of those things that I'm jealous. I am jealous of the current generation. Hackathons are like the coolest thing since sliced bread because everyone wins in a hackathon. The developers and the startups that go to hackathons have a great experience. The venue that hosts and the sponsors that host the hackathon get in front of all of these people, and the organizations whose technology you're building on top of obviously gets the benefit of the results of the hackathon, right? And all that feedback, that product feedback and stuff like that. So hackathons are a perfect storm. So I don't want to dwell too much. I think the audience probably gets that, that a hackathon is a good accelerator MVP. I would only go into the incubator accelerator space if you have a strategic shift, meaning you're BMW and BMW's, remember Telerik, it was iOS. So for BMW's iOS is electric cars maybe, right? Like, so you want to learn about electric cars, do some type of hackathon for electric cars, or automated cars, IoT, that kind of thing. So it has to be a seismic shift in your organization to go through the time, the expense of an accelerator, because, do the math. If you're putting 30, 40K into 10 companies and you got to hire someone to run your accelerator, you're talking at least $500,000 plus venue, right? And a little marketing. So you're talking a minimum 500K spend to get an accelerator off the ground. Probably closer to that.
I might even justify that versus the classic R&D that a lot of these companies do, though, which is sort of what I call the labs in the wilderness, where they have people coming up with great new ideas, but they actually never reach the market. But so that's great. I don't know if you have any final thoughts you wanted to leave with people, Stephen, but really appreciate having you on board. How can people reach you?
They can reach me at my Twitter handle is works on my PC. And that's because I've worked with a lot of developers that always said, hey, it works on my computer. And I go, that's great. Let's ship your computer to the customer. I've been a development manager and a developer for 20 years. So works on my PC is the easiest way. I should have put that in I put my little old Facebook tagline in there. I live about a mile away from Facebook, so that's why I pick on them all the time. I see them every day in their little Facebook sweatshirts in the delis, and so definitely get me on Works on My PC, or they can get me at my company website, which is fresco.vc.
Great, thanks much, Stephen. And I apologize to the audience about all of the echo if you were suffering from that in particular. Moves the Needle actually can help you with both the hackathons and the startup weekend type of experience. Our workshops are very immersive and designed for enterprises as opposed to designed for startups. We're actually out and about in the great cities of the world, so if you'd like to find out where we're going to be, you can visit our website, movestheneedle.com. We're also on Twitter at movestheneedle. And your host, Brant, here, I am available at brant@movestheneedle.com, and I would encourage you to reach out. Also, we will be transcribing this, and there'll be a blog post on our website that summarizes some of the great advice that Stephen's been giving us. And so thanks for coming out, and everybody have a great weekend. Thanks, Stephen.
No problem. Take care.